The U.S. Federal Reserve kept its interest rate steady as inflation slows. Despite markets' expectations of a possible rate cut in March, the Fed chair said more confidence is needed on the inflation front before cutting the rates. Our economics correspondent Shin Ha-young starts us off.
After the U.S. Federal Reserve's first two-day meeting of this year, the FOMC on Wednesday announced a fourth consecutive rate freeze. With this latest decision, the benchmark interest rates in the U.S. remain in the 5.25% to 5.5% range.
As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance.
Since before the meeting, the market's focus has been on the timing of rate cuts from the Fed. There have been rising expectations of a March rate cut after the Fed last month hinted at 3 possible rate cuts in 2024. However, Fed Chairman Jerome Powell expressed doubts about a cut next month, saying it's less likely that the committee will reach a level of confidence about inflation, which would allow rates to be cut by the time of the March meeting.
It's not that the 6-month data isn't low enough. It is. It's just a question of can we take that with confidence that we're moving sustainably down to 2%.
The Personal Consumption Expenditures Price Index, which excludes food and energy for last month, rose 2.9% from the year before. This is the first time it has dropped to a 2% level since March 2021. The Fed chairman also said there is more concern about the risk of inflation staying above 2% than there is for major inflation spikes. U.S. stocks fell following the Fed's announcement. The Dow Jones Industrial Average dropped 0.82%. The S&P 500 dropped by 1.61%, while the Nasdaq closed down 2.23%. Meanwhile, the latest Fed rate freeze means the key interest rate gap between South Korea and the U.S. remains at 2 percentage points. Shin Ha-young, Arirang News.